Now joining us to talk more about markets. Deven, good morning. Deven, if there's one sector in the last say 48 hours which has been kind of coming back and buzzing a lot for a variety of reasons, is the defense space. Now, ET reporting this morning that even the Adanis could be foraying into shipbuilding. There's a massive demand supply mismatch, and the big shipyards across Asia, even all the way to Japan, are chock-a-blocked for the next 5 years. Your thoughts on shipbuilding, ship repair, all of those kind of things. A lot of shipbuilding stocks in India have already got re-rated. Mr. Modi is visiting Russia right now, so defense is in focus. Your thoughts?
Yeah, good morning. Well, yes, I think in the budget also we are expecting the higher amount of allocation towards this particular sector. And as you rightly spotted and narrated, the requirement for the ship building and maintenance, I think, is significantly high. On one side, I think we have a defense sector which is required to be catered to. But on the other side, due to the inland transportation requirements that the government has significantly emphasized under its Sagarmala project, I believe that I think a significant amount of requirement would be for the cargo and trucks going forward, as far as I think the inland transportation is concerned. And at the same time, commercial requirement for the ships, I think for the purpose of passenger movement as well, is going to be on an increasing side with the leisure tourism increasing, including in the pockets like Lakshadweep. So all in all put together, next 5 years are going to be seeing a significant amount of inroads into this particular area of activity. And as you rightly narrated, I think the clear demand is going to be for building the ships out here. India has historically held this particular position largely in the portfolio of government companies, and they are not adequate at this point of time. Some of these companies are definitely catering to the services of the ships, I think, which are basically being done by some of the private sector players. But I think the larger players, like you mentioned, Adanis, could be the right choice to basically go for the shipbuilding kind of activity. So it's not a near-term kind of a advantage to any one or two companies, but the long-term as a directional call, I think this is going to be a significant one, as I understand.
Okay, fair enough. That's the take coming in. That is going to be quite interesting. And, if we were to just expand that and talk a little bit more about defense as a whole, we're talking about mega schemes that could potentially be outlaid in the budget this time around. They're looking at, the government has spoken about the 100-day plan. That's by the defense minister. There's a lot of focus on the Make in India theme. How are you looking at this sector shaping up for the rest of the year? Is the long-term view still looking very promising?
Yes, I think the directional call certainly, I think, remains absolutely positive, Evan. And I believe
Theme on the larger scheme of things is a very attractive one. Uh, Deven, do you have any airport exposure, either directly or indirectly, because it's housed under Adani Enterprises?
yeah, under Adani Enterprise, I think this particular business is being seen, and we continue to have some positions in this particular stock. So, from that perspective, an indirect proxy understanding on the subject is definitely there. What we understand in this particular game plan is that I think on one side, this is completely an infrastructure play to build your airports. And on the other side, I think you have got stream of revenue coming in, be it in the area of, I think, the passenger tax that they collect or the passenger fee that they collect, or be it in the area of, I think, the aircrafts, I think, landing and taking off kind of arrangement.
Incidentally, my colleague was speaking about them yesterday. Anantraj shot up 5-6%. There are some other plays as well indirectly for this data center kind of exposure. Have you looked at this data center opportunity? Do you have it in your portfolio or studying it?
Is this question for me, Ajay?
Yes, Devin.
Yeah, okay. So, well, I guess I think we have definitely, I think, looked at it again. I think a proxy is through Adani Enterprise, through which we have tried to understand this particular business. Business looks, I think, reasonably good. Of course, I think the business model per se at this point of time, I think it's not very easy to come up because of, I think, some financial numbers are definitely required to be looked at. But the most important part here is that I think larger corporates, I think, are basically moving a systematic shift to one and another services. onto the cloud and the computing services. That's where probably I think the larger push is going to be. In fact, if you look at the Fortune 500 companies, hardly 30% of these companies are still into the cloud and the data centers. Rest of the companies are still, I think, on premises kind of an infrastructure that they are operating with. Many of the companies are still operating with a hybrid infrastructure. With the 5G proliferation, I think this is going to grow, I think, significantly. That is what we understand. So that's the broader understanding on the subject that we carry. The financial numbers at some point of time will be more meaningful when we start looking at the balance sheets, I think, of these companies.
Okay, fair enough. That's the view coming in. In the meantime, let's also get in a take then from you on some of these FMCG counters. You had the Q1 updates trickling in. What's the expectation when it comes to the budget, Deven, with respect to what could serve as a booster for FMCG?
So, Alan, this budget is going to be a focusing on three areas. I think in one area which is called A for agriculture, I for infrastructure, and M for manufacturing. Now, in each of these three areas, which you look at it, I think the underlying proposition is to pop up the employment agenda in the country, in the rural areas. And that is where probably we believe that some of the FMCG companies are beneficiary. Because as you see higher amount of activity happening in the rural areas, be it in the area of agriculture or infrastructure or manufacturing, you are expected to see the larger amount of distribution of income in the hands of poor masses. And they are the ones who are likely to penetrate and they are the ones who are likely to be consuming significantly large amount of essentials. So from that perspective, I believe that I think FMCG companies are definitely well positioned. In some of the cases, I think they have significantly created their rural presence. Their supply chain network and the distribution network has been strengthened. And the likes of HUL have also demonstrated the AI formation, I think, in their business, wherein I think they would be looking at the demand generation through the AI kind of applications. So all in all, put together, I think rural focus cannot be denied. We believe that if economy is growing at 11.5, 12% nominal rate of growth, then in such situation, I think the FMCG space could possibly grow equal to economy or even slightly more in some of the cases. So selective companies to companies, I think we have relatively better positions now as compared to in the previous years, wherein I think we probably had a muted growth. Now the I think amount of growth that we are expected to see in some of the FMCG companies will be far more bigger and sharper going forward.
All right, stay with us.
Theme from here on? Is it the affordable housing developers or housing finance or ancillaries? Because at the same time, there's a big opportunity there. This is a discovered theme and which has already moved up in the last 5 years.
So housing is definitely, I think, a next 25, 50-year game as far as the country is concerned, because the amount of prosperity that we would be adding due to the growth that we are seeing in the economy, I think it could result into the first beneficiary sector, which will be housing for sure. Now, whether one should buy one or one should look at, I think, everything in this space, I think I would say that I think yes, I think there is a enough amount of opportunity in every area of activity. On the one side, you have got the real estate companies who are developers. Fortunately, these developer companies today have a asset light model wherein they are basically more working on the projects, and those projects are being sold very systematically under the RERA schemes. On the other side, you have the building material segment as a whole, wherein about 250 different industries are covered therein. I believe that I think this is one area where probably I think one can keep an eye on with a very sharp focus. Be it cable, be it lighting, be it cement, be it paints, or for that matter, ceramics or whatever other numbers I think that you can get it. I believe that I think this particular segment is likely to show a significantly large amount of growth on a sustainable basis going forward. So certainly, I think building material segment is one focus area which we want to keep it. Along with that, I think the steady return provider would be the housing finance companies. Well-capitalized housing finance companies would definitely have relatively better advantage going forward because 20% plus kind of a growth in the credit lending against the housing is definitely seen in next 3 to 5 years in the near future. So from that perspective, some of the housing finance companies too could be, I think, a relatively good choice. Likes of, I think, Bajaj Housing Finance, which is part of Bajaj Finance. could be, I think, a real good choice because I think they have the ability to do the prudent lending and they've scaled up this business over the last 5 years in a very systematic manner. So we certainly look at this space very, very carefully and I think also look at, I think, from investment point of view.
We're talking about making India a hotspot of tourism, but when these kind of headlines, make way, what is the message we are sending out? I mean, don't you think there could be a massive business opportunity here as well? Like, I was 6 months back, there was a very nice advertisement which Kirloskar Oil Engines put out that in Thailand they're actually for evacuation of huge volumes of water, they are deploying some massive engines. Why can't we do all of that here in India? And do you see some big opportunities for select companies in that regard?
Yeah, yeah, I think one line message I think is that I think in this city, in this state, I think unfortunately the government and the administrators, I think they lack vision. Unfortunate part it is that I think this capital, financial capital of the country, which contributes significantly to the nation's GDP, is being completely neglected. And the kind of infrastructure which is being created, I think, is dated infrastructure, frankly. I think which we wanted to have 25 years back is being created 25 years after. And who knows, I think, whether after 25 years this infrastructure will survive or it will have further requirement. So lesser we speak on this subject matter. Yes, I would agree that I think the corporate sector definitely holds, I think, key here. They may probably, given a chance, they may probably, I think, build this city far better and I think far more equipped. And that's where I think a business opportunity could also arise. Unfortunately, I think neither the civic authorities will give up their power, nor the government or state will give up their power and allow the corporate sector to take up the leadership in these activities.
Right. Okay, that's the take coming in on where to actually find opportunity within trouble right now. Just want to mark a couple of other headliners from yesterday, and definitely PFC REC did gather quite a bit of momentum. In fact, yesterday REC was one amongst the top F&O movers, held out by nearly about 5%. Deven, how scalable is the opportunity in the power financiers, and do you think that irrespective of that election outcome day lows and the kind of run up that these stocks have seen since, do you think there's still a buy?
Absolutely. I think from valuation point of view, I think these companies are looking absolutely very clear. They are not expensive. On the other side, the government has been allocating higher amount of money towards infrastructure, and one of the bigger beneficiary is the power generation and power distribution area of activity. Be it the conventional source, be it the renewable source, or be it, I think the uranium source, I think, which is going to be now becoming reality after the Russia visit of PM, wherein I think the nuclear power plant, I think in association with Russia, will be coming up in the country. I think overall allocation of the amount in the budget is going to be only increasing. And that is where some of the core focus active entities like REC, PFC kind of companies will mean a lot to these businesses. Fortunately, even though in last 1 year these companies have moved up and I think the valuations have got re-rated, I still believe that I think they are not expensive. And given the kind of a balance sheet strength that they have created, given the kind of a liability franchise that they have, I would think that I think these companies would have eventually far better performance to talk about. So next 5 years could possibly belong to I think the lenders like RECPSC in India.
Right. Okay, that's the take coming in on PFCREC, the big buzzers of late. But in order to provide
Stocks. Right now, this Star Health just had a Outlook 2025 meet talking about tripling their profit, doubling their business in the next 2-3 years. Some other insurance companies too have kind of bottomed out from the peak pessimism and have normalized. Do you have insurance? Or would you like to play it in your portfolio?
Yeah, I think Ajay, we have been invested in insurance from a very long period of time now. We believe that this is a game which you have to play for next 35, 40 years. Because as the insurance companies mature, I think when they grow their size, probably I think larger amount of profit is getting built into the balance sheet and the balance sheet becomes larger. LIC is the classic example. Up till now, it was not listed, so I think we were not in a position to review the financials. Today, you can easily review the financials and you can see how in 65, 70 years, this company has actually scaled up its business. A similar situation is happening with some of the newer generation life insurance company health insurance company as well, wherein I think they've started their operation in 2000. They have crossed 20 years now. Now, I think in next 10 years or so, the size is going to be becoming ultra big for them. Fortunately, currently with the higher amount of per capita income in the hands of people, and at the same time higher amount of saving and investment in the GDP, you are seeing contribution towards schemes like insurance, schemes like provident fund increasing, including the mutual fund, SIP, etc., increasing. Given this kind of strength of growth, 18 to 20% kind of a new business premium is not ruled out on a sustainable basis. And that's where I believe that some of the insurance companies would be very well positioned going forward to take the benefit out of it. So there is a reason to remain bullish in this particular space when you are looking at the long-term investment in your portfolio.
Okay. In the meantime, some of the other names which are going to be in focus, and this week alone, we'll have both TCS as well as HCL Technologies, report their numbers. Deven, any hope from IT bellwethers, TCS, HCL? They're all set to report their numbers because the Nifty IT index sure has moved up month to date.
Yeah, Aisha, I think couple of things to watch out for. One, how systematically I think these companies are basically talking about adapting the new environment. And when I mean to say new environment, on one side, I think they are transiting, taking the companies into the cloud. Cloud computing activity is increasing, along with the data center part of the activity. On the other side, I think adoption of AI in every business activity is one which is going to be, I think, significant as we progress further. Fortunately, Indian IT companies, including TCS, Infosys, they have already created a significant amount of, I think, strength within the organization today in area of, I think, building the AI framework for the use cases, different use cases. So I think a commentary in the conclusion or the narrative rather, I think on this particular aspect would be more meaningful in this particular result season as we would like to see. Overall, we don't expect any dramatic improvement in the numbers, but we do expect the strength in the commentary to be positive hereafter, as against, I think, circumspect, I think, in the previous quarters. So, from that particular point of view, I think the IT companies could possibly get re-rated. And from the lows, I think if they have to appreciate, I think 15 to 20% kind of appreciation is certainly possible in many of the IT companies, including some of the mid-tier IT companies as we see.
Right. Okay, that's the take coming in on some of the technology names. Today, of course, we're going to be looking at ideas or themes that you're working with.
I think immediately, I think we don't have too many things to talk about, I think, from the mid-cap space. But we continue to hold our long positions in the area of BFSI, and we believe that some of the banking and financial companies probably, I think, would get re-rated from here on. And that might include the likes of Bajaj Finance, Bajaj Finserv, or for that matter, even HDFC Bank, SBI included. I think we believe that I think some of these institutions, some of these companies, they would probably, I think, participate big time into the market now. They have been languishing for a good period of time. They should be participating big time now. That is one area where we believe, I think, is significant for us. Second area in the mid-tier IT company space, where we see the companies concentrating on their niche play in engineering R&D space. I think they are the ones who could possibly be participating far better in the coming period. And the last one could be, I think, some of the consumer companies, particularly in the FMCG space. They are looking relatively more stable from a perspective of producing growth. Though in those cases, I think the valuations probably are at this point of time quite reasonable. I would think that I think given a choice in the market, I think you would like to buy with a margin of safety in some of these areas where probably we are focusing.
All right, Deven, we'll let you go on that one. Thanks so much for your time this morning. Also, watch out for Yes Bank. There are.
If you like this video, then like, share and subscribe to ET Now.